Hey guys, welcome to another episode. If you are struggling to become a profitable trader, watch this video at the end. I'll share the best entry that will help you grow your small account. I'll explain supply and demand levels and what to look at before drawing demand and supply zones. So let's start with the supply and demand levels. A supply zone is an area where the price failed to break through and was rejected multiple times. From price action perspective, market sees this area as expensive, which causes buyers to close their long positions and sellers to open their shorts. Now, in opposite, Advan Zone is an area below where the price failed to break through and was rejected multiple times. From price action view, the market sees this area as cheap, which causes sellers to close their short positions and buyers to open their long positions. Now, let's discuss what to consider before drawing a supply and demand zone. If we go here to our GBP JPY pair on a 15-minute time frame, you first identify the market structure, where the market is trending. If you go to your 15-minute time frame here, you'll see that the market was making higher highs, higher lows, higher highs, higher lows. That means the market was bullish, right? So you look for your demand zone, and you're going to consider these three factors to help you find a golden zone, right? And just trading supply and demand zones is one of the most powerful trading methods because it allows you to take the same trades that banks and financial institutions takes, right? So these factors that will help you to determine the strength of the zone. So one, the time spent in the zone. After identifying the zone, if I look at this zone here, right, I'll see that this one, it was just an impulsive move. That means it spent little time in this zone. That means for the first factor, it is true, right? And after that, you should always pay attention the beginning of the move. So if you see the beginning of this move, right, it is okay, right? So you got another factor, the candle size of the zone, right? So if you look at that candle, at this candle, right? If you look at this candle, it is really a big candle. There was an impulsive move here. That means also the zone that will be drawn here will be golden, right? And the third factor, the freshness of the zone. Is that zone have been tested before or it is new, right? So if you identify all those three factors, just come and draw it. Now I just come here, identify where the price started to impulsively move up. So I draw there like that, right? And after drawing, I just wait for the market to come and tap in that zone. Then it will just move upwards. Whenever the market reach that zone, it will just what? It will just buy. So that's how you can identify golden demand zones, right? And after that, so let me show you how you can identify the golden supply zones, right? So here the market was bearish, right? It was making higher lows, lower lows, higher lows, lower lows. So I identified here my before the market started moving down here, right? There was a candle that made, I identified the zone that made all my factors, right? So if I can show you here, you will see that there is that zone there. So there is that zone there. If you look at the time that candle spent in the zone, it is less time, right? And also you look at the candle size and the freshness of the zone. So if you identify all of them, you just come and draw your zone right here, right? After drawing your zone there, you will see that whenever the market will reach here, it will just sell. Whenever the market will reach your supply zone, it will just sell, as you can see there. Or whenever the market will reach here, it will just what? It will just sell, as you can see. Whenever the market taps your supply zone, it will just sell, right? So, guys, this strategy is a golden strategy. Make sure you backtest it before you use it, and please consider using stop losses so that you protect your capital. So thank you for watching, guys.